looking at the S&P 500 here so far, we have established basically what we did over the last couple of weeks. It was that we have been doing higher highs, higher lows. We saw another higher high, and then we saw another higher low. And so far, we are breaking that resistance of 599.58, which is the prior higher highs there. And what do you notice every time we break those higher highs? We see another high coming up after. So heading into this upcoming week, this is what we will be seeing on the S&P 500. We're anticipating that we're going to see a green week for Monday and Tuesday. We're going to have a nice green week session where the S&P 500 will continue to push higher. Considering this really nice setup, it does look like the market may see another week or two of upside heading into late December, and then sell off maybe towards the end of the year. I don't want to predict things. We want to take it one candle at a time. So far, this is looking like we're going to continue to see more upside heading into the upcoming week based off of this weekly chart here. So each candle here represents 1 week. And so far, the way that this prior week candle closed, it looks like we're going to be advancing further higher. Now, let's take a look at how the QQQ did. This is QQQ representing tech stocks, and QQQ on the daily chart here, where each candle represents 1 day. So this is that was Friday session. This is Wednesday. This is Tuesday, Monday, and so forth. We have a bullish engulfing. We had a bullish hammer on Tuesday, Wednesday session, followed by a Thanksgiving holiday. And then on Friday, when we came back for the half day, we printed a bullish engulfing. And heading into this upcoming week, you can use this level here, team. You can draw it on your chart. You can write it down somewhere. And if you look at it in the morning and you see that QQQ is trading above 510.13 resistance level, you can start entering a bullish trade for the stock expiring next Friday, either next Friday call or this Friday's call. If I were to take the safer route, I would say buy a next Friday call just in case the market does end up positioning itself to even go up in the following week. So your confirmation to remain in the call is going to be above 511.45. Once they break the high of that wick right there, just as we have mentioned in the mentorship programs, this is going to trigger that continuation to the upside. And the next target is going to be 515.36 resistance level for QQQ. So that is going to be our target for QQQ if the tech bulls do step in. So the chances of tech bulls stepping in heading into this week is high. And we are seeing some already moving in the Sunday hour session, such as Tesla. I think Tesla's up quite a good amount. Let's take a look. Tesla's trading at 352, which is, it doesn't update on the daily chart. It's trading right around here. So it's already broken the 50% retracement of that candle, which means that bulls are likely going to advance towards 357 by the end of this week and try to get that breakout. So if we take a look at the weekly chart here, the weekly chart doesn't look the best, but the shorter term, I mean, the bigger time frames look good. The weekly chart, because of this particular week, did not look the best. But if we look at, let's say, the 4-hour time frame, looks pretty good. Hourly time frame looks pretty good. We go to the bigger time frames now. On the monthly is obviously looking really great. And this could be the starting candle to get Tesla towards its historic all-time highs at 415 and maybe even higher if they continue to get more good news coming out of this administration. I know the news hasn't been good, but Elon Musk's relationship with Trump is definitely influencing Tesla and really helping all of his investments. So let's get back to our analysis, somewhere where we actually know what we're talking about. So the S&P 500 on the weekly chart looks really good. Looks like we're going to see a continuation. Let's take a look at the hourly time frame as well. Hourly has the RSI chilling at 70%, which means once we do break the resistance of 603.25 heading into Monday or Tuesday, this is going to, very likely Monday, it's going to trigger a melt up operation towards 605, and I'm thinking we head towards 609 within the next 2 weeks. Don't quote me on that target. I will be happy with 605, but around 605 is when I will start really encouraging the team to be careful and not trade SPY up there. But so far looks good. I think we're going to see more upside this week. And even on the 605 team, don't quote me because the market will do what it wants. And so far, the only thing that we know is the market looks very bullish. bulls have the continuation, bulls have the higher low structure, and they're breaking that higher high. They've already broken it on Friday session. They have set the ground to get more upside heading into this week. Now let's move on to QQQ. QQQ on the daily chart, beautiful consolidation, very, very nice digestion above the 20 EMA line for a very long time. And when you see this continuous hold above the 20 EMA line, this ends up creating this expansion where we move away from the 20 EMA line. So I think this is a perfect opportunity for us to start seeing that expansion and perhaps retesting that 530 on that QQQ bullish channel there. Now, I do want to go back to SPY really quick and show you the bullish channel that we are trading inside of. So we can see that we have been ping-ponging inside of this bullish channel, retesting resistance, going back down to support. Now we're heading for that resistance again. And the resistance tells us 620 to 625. But for now, let's focus on 605 and then 609. And we will assess from there. All right, so let's move on to IWM. What's going on with IWM here? IWM has been going up and up and up. And so far, it's consolidating. It's not giving back any territory. And I think this continues to be bullish for the small cap. And it doesn't look too bad at all. We are trading at a level of resistance, so be a bit cautious. But so far, the trend continues to hold really well. And I think bulls are going to continue to push higher on IWM. So the dips will be bought. We bought the dip. You all remember we bought the dip just around here 2 weeks ago, and we got over 100% on that contract. So already doing really well. We caught the dip over here as well. We did really well on that. And yeah, so whenever the next opportunity shows up on IWM, that's a high probability setup. I'm going to look at it for the team so that we can trade it. But for those of you that do trade it, take it for this particular setup here. Take it for pretty much draw the zone here, draw the level, draw your support at 239.50 and your resistance at 244. And once they break from either side, trade the momentum of that break and take advantage of the momentum there. But yeah, I think 244 can be retested this week, where bulls can retest it one more time and then reject it if they want to go down or if they want to continue to go up. But so far, the trend or the control remains in the hands of the bulls here, and bulls can advance higher towards 244 and continue to push higher on IWM. But do be careful, because we are trading at the upper line of this resistance channel, and we can potentially go down and build more, pretty much collect more liquidity, exchange old hands, old profit takers with new buyers, and then advance the trend higher for the upcoming years. As we said, as we head into low inflationary times, IWM is going to continue to get rotation inflow. And now that we are talking about IWM and tech, I do want to talk about TXN real quick. So TXN, sorry, TNX. TNX is the 10-year node, but why is that not loading? That's a bit so I was able to load this up on TOS, but I'm not able to load it. So the TNX, for any of you that are able to pull up the chart, is currently in a head and shoulder setup, and this means that it is in a trend changing formation where we can see rotation. Okay, so basically, to simplify it, when the 10-year goes down, when the 10-year goes down, we see rotation flowing into tech and pretty much equities in general. But in this case, considering that inflation is heading lower, as we have been saying, IWM, small cap, the Russell 2000 can continue to advance higher over the next 2 to 4 years. I mean, we are barely breaking this resistance. All of the other indexes have already seen historic all-time highs. And this is IWM that has yet to, that has barely, this is the first week that it has closed very clearly with a follow-through above the 2020 historic all-time highs. So this is a good thing for small caps, and I think rotation will continue to flow into those. Now, let's take a look at DIA. DIA has been very, very strong, and you all know how bullish we have been on DIA. Just continues to advance higher. And taking a look at the weekly chart here, very, very bullish. We're getting above the 30% RSI, which can trigger that melt-up operation. And it's quite wild. It's quite wild how bullish the Dow Jones Industrials is on the monthly time frame. Usually this is where investors get concerned, because once we do look very bullish on the monthly time frame, this is when we actually start to sell off. If you notice right here, we were very, very bullish on the Dow Jones Industrials, and that's when we sold off. So we may be or not maybe, I shouldn't say maybe just yet, but we may start to see some of those narratives come out soon. And there's a reasonable there's a reasonable data behind why they will feel that way. So yeah, team, just wanted to share that with you. Now let's take a look at some of the stocks that can potentially lead this week. Now let's take a look at Apple here. We have been talking about Apple. You all know Rainbond and I traded that just at the breakout of 229. Rainbond was in it very early. She got in. I think she got in right on this candle there on the day that we got the breakout of the zone. And she was up 30% on her contract before we even bought it. So what we did was right on this breakout, we picked up a February 21st 270 call, and we made some really nice profits for the team there. I think we secured profits around 35%, but it's gone up higher and looking like we are going to continue to see more upside on Apple here. So Apple will continue to get rotation inflows, which is going to influence QQQ to push higher as well. Let's take a look at Microsoft here. Now, Microsoft, like I said, team, this one has really got me concerned. We have been watching it for a while because it's been creating this notion that it has a head and shoulder setup. But to me, the way that I see this setup, I think it's a trap. I think it's a bull trap, a bear trap. And it may look like it may be a bear flag, but it could be just another one of those setups to collect liquidity and then advance higher for that higher high to come in above 468 around the 520s and or so. The setup honestly looks good. Let's take a look at the bullish side, and then we'll come back and look at some of the bearish side of things. So the bullish side here, we have this uptrending channel. We have, as we can see here, we have, this is the third test here. So we are really holding this third test of this bullish channel here. And what this tells us here, the psychology behind this is that with each of the sell-off, demand is higher because price is not selling off to where the prior sell-off was. So we can see right here was the sell-off, and then we got another big run. That was the sell-off. So that sell-off is much higher than that sell-off. And now this sell-off is higher than that sell-off. So this so far looks like bulls are indeed advancing, holding the line. And once they break this key level resistance at 441, that's when they can really start shooting higher. Now, looking at the weekly chart here, I can't really say much aside from the fact I can't say much bearish things yet, despite this being a potential bear flag. Here's why I'm not looking at it in this case. First of all, we're in a bullish, we're in an uptrend. So when we're in an uptrend, we try not to look for bear flags. Another keynote that I am using is that it's my understanding off of the 200 and the 20 super trading strategy. And we have been maintaining the 20 EMA line very, very well. When we maintain it very well, what the stock is essentially doing is it's eating time off the clock, really just cooling off, because we saw significant upside on Microsoft before a lot of these tech stocks did. And it's simply just cooling off, eating time off the clock, waiting for the moving averages to catch up. And that's how I take it. Now, if we do as a stop loss, if you do enter Microsoft, or if you are in Microsoft trade with me on the February 21st 475 call, put your stop loss at 410. Okay, if they break below 410, whatever it may be, whether it's a 50 to 60% loss on that contract, we're going to take it. We're going to walk away with that loss, and we're going to wait for the perfect opportunity, because here's what will happen. Okay, let's say that in the worst case scenario, this ends up being a bear flag and we go down here to the smart money demand zone there. When we go down there, this is going to be even a better opportunity, because we will be able to get much better. We will be able to farm better strikes with much more time. That is going to be a much better investment for the future. So even that itself will be a good opportunity. But looking at it so far, it doesn't look too bad for the bulls there. And it could be any day before the bulls come in with a big green candle and try to break that level of resistance at 441 to advance higher. So let's go over the daily time frame and see what's going on. The daily time frame, like I said, it had been very scary, and even now it does look scary. But if you all remember from the last Sunday meeting, we talked about, we even drew this candle, believe it or not, we drew this candle. Who remembers when we drew a big green candle on Microsoft and said, hey team, the only way we are going to calm down on Microsoft is if we see a green candle like that. And look at that. We literally got a green candle like that. Now, unfortunately, we did not hold the green candle, but we did step in with buyers coming in and buying the dip. So we are still above the 20 EMA line. We are still above the 20 EMA line there. We are still above the 200 SMA line. So the bull market is still in for Microsoft. And I think if they step in this week and break this resistance with a nice green candle at 428, then they're going to really advance higher towards filling this gap at 431 and then hitting that resistance at 441. Not this week, but maybe in the upcoming weeks. But so far, heading into this upcoming week, I'm expecting Microsoft to finally wake up and break this resistance at 428.50 and set the ground for this move for the bulls to pretty much come in. Let's take a look at the weekly time frame. Again, the monthly time frame here on Microsoft. We can see it's been eating time off the clock, so it doesn't look too bad. And it could be one of those weeks or months for December where we may see one of those green candles come in, especially with what we talked about with the 10-year Treasury coming down. This could really send rotation inflows into the tech. So yeah, so let's see how this goes, team. Let's see how Microsoft goes. I do like the setup. And if you are interested in this as well, you can pick up Microsoft February 21st, 2025, 465 call. I know I said 470, but I think 465 call would be a better choice. Let me see if I can find something better for you. If you want, you can even give yourself much more time and pick up the April 17. I know it's a bit expensive, but the April 17, 495 call, or even the 490 call at 5.0. Either you can pick up the 495 call at 5.20 or the 495 call at 4.55. I think both of those contracts are amazing. Grab one, don't grab both, just grab one, depending on which one fits your risk better. And I think that's going to be a great contract to hold heading into the upcoming weeks on Microsoft. And like I said, your stop loss is going to be set at 410 on the stock price. If the stock price goes below 410, we're no longer going to be in that trade. Dizzy, that's right, on Microsoft, yeah. All right, now that so far so good on Microsoft, team. Someone type in the contracts in the chat so that our team don't forget. These are two good contracts that I'm that I would recommend for our team on Microsoft. Now let's go over Tesla. Terry wanted to know what we did on Tesla and when we entered that Tesla trade. So we got in on Tesla on November 25th at 12:53, and this is what happened with this contract. So we entered on November 25th when the stock was basically already down. I think it was trading around 345, 343 or something. And I was like, you know what? Bulls are clearly holding this consolidation zone. And at the time, the market was just setting up to advance higher. So I was like, you know what? This is a good timing for us to enter Tesla because it is, the market, it's been digesting and eating time off the clock for a while, not going down to the gap fill. And it may be a good time to now start trading Tesla with the market pushing higher. But then if you look at Tesla was going down while the market was going up. So what we basically saw was we saw some premium crush on those contracts, but now we are pretty much back up, and I think we're still down 20%, but the stock is up $7 to $8 after hours, and I think we're gonna be a big time green by the opening session. So yeah, that's what we did with Tesla. Now I do want to talk about something, team. If you go back to my swing trade, what I said was I basically bought this contract, and then on the same day, you can see this is about an hour and a half later, the same day after the market closed, I said, you know what, team, I'm changing my mind about that Tesla call, and I think we may see that gap fill. So I said, hey, team, when Tesla rebounds tomorrow morning, I'm going to close it out and then buy to open Tesla January 17, 2025, 260 put at 320. So we will get out of the Tesla 470 call and switch to Tesla 260 put. And if anybody did follow that plan, this is what happened the next day. When we entered right around here at 340, the market did rebound to 346, but somehow I was absolutely shocked. I've never seen options behave this way. Our contract for the January 17 was actually down 15%. And I was left, just thinking, are you serious? Like, the stock is up 2%. How could we be down on our contract? And unfortunately, that's what happened with Tesla. And we were not able to follow the plan like I wanted to. So had Tesla been up 2%, or had Tesla premiums been implemented the way they usually would be, and we had gotten our premiums, let's say we would be up green over $100 to $150 the way we should have been, then I would have closed that trade on Tesla and I would have switched into the 260 put, like I said, which would have really banked for us over 90% the next day when the stock dropped to 326. So for anybody that did do that, you printed. But yeah, I did send out an update for the team after I got trapped. Going to get out soon. We'll send out an update. So at 7:30 at the time, I was waiting for the premiums to kick in, so for me to get out. But yeah, I was just never able to get out. And now here we are. Tesla's going up today, and things are looking good. I'm looking forward to more upside. So I did share the analysis on the weekly watch list as well. For those of you that entered on Monday, on Friday session, you're doing really well. I mentioned Tesla at 953, which is before the market closed, and I think it was trading around 341. And as soon as I posted it, about a few minutes later, we saw some rocket moves higher. So yeah, this contract, if anybody picked it up, the 540 call for February 21st, they're going to be up really nice tomorrow morning. Some of you wanted me to discuss NVIDIA analysis as well. Here's NVIDIA. NVIDIA post earnings so far has flushed the selling, and we are now sitting at this third retest. And as we have discussed in the mentorship, when we see these wick reactions at a support retest, this is usually bullish. And considering this is the third retest, we have flushed the sell-off. So you can see the stock had been advancing ever since mid-September, all the way to December, advancing higher, and it fired that squeeze up. So now that we have fired the squeeze down, we have flushed all of the sellers from that recent rally post earnings, and the premiums have really got crushed. I think this is a great time for long-term investors to get into NVIDIA. And pretty much take advantage of this opportunity here post earnings. NVIDIA looks good. You can pick up a long-term contract for it, targeting 180 and maybe even 190. Now, do keep in mind, team, you don't have to have the contracts go in the money. You can just trade the premium of the contracts like it's a stock. So you can buy the April 17, the NVIDIA April 17, 2025 call, the 175 call. You can pick it up at 5.70 or 5.80 tomorrow, and you can trade that like it's a stock. What I mean is, we may never see NVIDIA doubling, but if NVIDIA does go up, let's say $10 from here, this contract, 10 to let's say $15, $10 to $12, this contract will end up doubling and even going up 150% or so. So this is what I mean by trading it like a stock, by giving yourself time on the options, and this really increases your probability. So you can look at the April 17, 2025, 175 calls or the 180 call trading at 5.0, and you can swing trade that contract at the current levels with your stop loss. You can set your stop loss at 133. If they go down below 133, just cut the trade, get out of that at that loss, and be prepared to buy the dip later on when the stock does bottom out. But so far, I think this looks good, considering that we have a bullish channel. There's a good chance this can continue to advance higher with tech stocks in the next 2 weeks there. So bullish on NVIDIA as well here, team. As you all know, I was saying in the last week, stay away from NVIDIA, wait for it to flush the sellers out. And here we are now. We have flushed the sellers out. I'm looking to trade this opportunity heading into the upcoming weeks. All right, now that we have discussed Tesla, let's move on to UPS. So again, I am going to share my UPS contract. FSLR, this is a trade that I am looking at. So the reason why I'm looking forward to trading stocks like FSLR and ENPH, last week I had ENPH for you all, and anybody that did pick up ENPH, you did really well. So if you picked it up on Monday session last week, you did really well on this trade. You made some really nice profits. It went from 67 all the way to 74. That was on our prior weekly watch list. Now this week we have First Solar, FSLR, and this one's also in the same industry. So looks really good. And the reason why I like this particular stock here is because with Trump tariffs, basically the domestic stocks like FSLR may do really well, may start to see some rotation. So keep your eyes out on FSLR here, okay, team? So let's take a look at which contracts. What contract did I look at? I forgot what contract I was looking at for FSLR, but this looks really good. Give me one moment, team, okay? So we can probably buy the March 21st 260 call at 6.0, or we could pick up the March 21st 270 call at 4.80. I think this is also a good contract. Now, I know, team, I know you're thinking, if you're new to our team, you may be thinking, why are you buying such further out strike prices? The stock is currently trading at 199. Why are you buying a 270 strike? Are you expecting the stock to go to 270? Absolutely not. I'm just taking advantage of the premiums, of the options, gaining significant value, giving me that 100% return, and pretty much being out of the trade. That's what I consider that a successful trade. So I'm not really expecting them to go in the money. I'm expecting them to move. So let me show you. Let me show you what I mean. We'll take a look at the 270 calls. I do want to show you. I want to look at the June expirations as well. But if we take a look at FSLR, this is the option premium for the FSLR. We're basically buying when the premium has already gone down by so much. So just when it was spiking around here at 220 back in early November, at the time, the contract was trading at $1,600, currently trading at $400. My goal is, even if we get 100%, I'm more than happy with it. And that's my strategy for these swing trades. All right. So as you all know, I have been bullish on BA, and I am holding it on the 2K cash account. And this one continues to go higher. And I continue to expect it to do better from here as we break out from this downtrend and advance higher. So BA looks really good. So far, so good. Is it bad if I take a different strike and expiration that you take? Dizzy, as long as you are giving yourself time. As long as you're giving yourself time. Now, this is something that traders do. And that's something I'm very afraid of. It's when our team, when I mention something, when I mention that I'm bullish on a stock and our team take a short-term approach to it, that is the worst. That's my worst nightmare, pretty much. Try to please give it time. Try to give it as much time, and try to see it in our perspective, try to see it on the bigger picture, see why we are feeling the way we do, and always give yourself time. June 25 contracts. I see. To be honest with you, I do find that a bit risky, because if I'm choosing a June expiration and you're choosing a January, you're cutting off more than 60% of the lifetime expectancy of that options trade, which is the most important aspect. Because what I'm basically trying to do, or the reason why I buy these particular contracts with plenty of time, is so that I'm not in that threshold where the contract starts to lose a lot of premiums if I'm wrong, or if I'm delayed by a little bit. So if that's the case, it's going to hurt your contract big time for your January expiration, while someone like us, who's holding June, is going to be in a much better condition, because we have plenty of time and we prepared for that. So that's what I'm afraid of. But March may be good. I think March is a good one. But yeah, just wanted to give you a little bit of of understanding behind the way that I alert these contracts. All right, team. So CMG still is bullish, in my opinion. This one is getting a higher low structure. So keep an eye out for CMG to buy the dip around, I would say, 60 to 61. This is going to be a good opportunity to target that 66 level. My God, team, I've been seeing like all kinds of restaurants being replaced by Chipotle around here in San Diego. So I think this is going to continue to do good. And NKE, I'm still bullish on this trade. Rain Bond is currently in this trade. Looks really good. We got a rally-based rally set up, and I'm expecting it to continue to advance higher in the upcoming weeks here. Bullish on NKE. FF still doesn't look too bad. It's consolidating, has a potential rally-based rally, still above the 20 EMA line. But because of everything that's going on with the EV and the Trump tax incentive removal, all that stuff, it may make the stock volatile, so it may need a little bit of time. But overall, I think this is a really amazing opportunity, and I think Trump administration could be one of the greatest balances to all aspects of the economy. I know I sound ridiculous saying this, but hear me out. Trump is generally more of a fossil fuel guy. What I mean is, like, he's into the energy sector, like real. I'm talking about oil and gas. Okay. But then you have a support from someone like Elon Musk, who can educate you on the EV side of things as well. which can really balance things out and benefit both sides. And I think we can see that in this administration, and we will find out in a few years if Ford does end up going back to 20s and stuff, and we will say, oh my gosh, this really did happen. But that concludes my session for today, team. I hope you all have a great rest of the night. Any questions so far, team? Someone said raising canes. Oh my goodness, my lady's been taking me out for raising canes in the middle of the night. And what's there's always a line in raising canes. You know what I noticed, Dizzy? I noticed there's a lot of youngsters in raising canes, like maybe like early college students. Yeah, it's very, very interesting. It's, you know, they've made it a playground, sort of like a place to hang out, and I think that's a really cool concept. But yeah, I definitely agree with you. It's I can see why. If they add tomatoes, I'll become a fan. But so far, they don't offer tomatoes on their burgers, or that's so dumb of me. I'm sorry. See, as soon as I get comfortable, team, I say dumb stuff. But yeah, that's it for me, team. I hope you have a great night. So far, any questions? Can we take a look at XRP? I can't really look at XRP because I don't have I can't pull it up on my TOS. And team, I honestly would not chase XRP. Please be very careful chasing crypto up here. You guys know when I send out these warnings, one thing I'm afraid of, okay? One thing I'm afraid of that I don't do, that I see many other Discord admins do out there, is that they prevent their traders from amazing opportunities in the future because they failed to keep their mouths closed and letting the team hold through the uncertainties. Sometimes, especially if you're an investor, you got to just hold. And I mean, not, sorry, that's a really bad advice. That's a really bad advice. But what I mean is, like, if you know something like NVIDIA, right? If you know something like, let's say, you know, like, you know, stocks that really, like Apple at the 160s, 150s, you know, these stocks are opportunities to buy. And basically what happens is, like, they say, oh, this stock is in a bear flag, it's doing this, it's doing that, and they prevent the traders from pretty much taking advantage of the opportunity that is you know, that is about to come from it in the upcoming years, because they're focusing on that short-term you know, short-term pattern. And I think that's very wrong, and that's one thing that I really try to avoid with my team. And yet here I am telling you, team, be careful with crypto right now. Wait for the next 3 months. If you're going to buy, wait at least 3 to 4 months for this peak to pretty much create a resistance, go back down, buy the higher low, and then take advantage of the next higher high. I mean, it's basic, you know, it's basic market structure. We don't want to buy in the higher high. We want to buy on the reaction of the higher low. And that's basically what I'm trying to say in market terms. Thank you so much, team. I hope you have a wonderful rest of the night. Take care. Please upload Sabrina.
Hey, Batty, just real quick, I just got in here, but I was going to see what your opinion was on the semiconductors, because I know they're kind of going through it.
Yes, sir. Let's take a look. So SMH, thank you for bringing that up, because I did forget to mention one of the stocks, AVGO here. This is one of the biggest holders of semiconductors, and it's looking really, really good. It has, I mean, it doesn't have a bullish engulfing candle, but it is trading at a level of support here where it's been respecting this. Like I said, with this pattern earlier, when we have a rising trend like that, it means that each time the stock sells off, demand is higher and we see a higher price. So basically, demand is so high at this time that we don't go back down to the 136. We get bought here. So this is what I mean. And if we see a green day on AVGO tomorrow, I think it may be a good opportunity to enter a call, but please give yourself plenty of time, okay? Our trader said, can't see the screen. Okay, sorry about that, team. This is AVGO here. And so far as we can see, AVGO has been riding this uptrend line, and we are now retesting it for the third time. So we are very close to the 200 SMA line. And if we can get a session above 163.10 tomorrow, I think this will be a good opportunity to enter for a potential reversal back up towards this level of resistance at 184, and maybe even a breakout heading into Q1 of this upcoming year for 2025 Q1. I think AVGO does look bullish. Let me see. I wanted to talk about a few more semis. ASML is another one that looks very, very interesting here to buy. Honest to God, team. This one's been selling off a lot, but here we are. Looks really good. Could be a good one to buy. Let's take a look at TSM. Here's TSM. TSM also is inside of this bullish channel, and this is a good one to own long term as well. So it has a bullish channel on the weekly chart here. Could be a good one, team. Could be a good one. The last higher low structure we had was a massive demand candle. This higher low structure is coming in a form of a bullish engulfing, and maybe heading into this week, maybe we will get a green candle like this on the weekly chart. So for the semis, I'm somewhat bullish, team. I don't want to say I'm entirely bullish yet, but it could be setting up for some bullish grounds. So TSM, AVGO, NVIDIA, these are all chip stocks. SMH is the semiconductor ETF. And this one does look a bit scary because it gives out this head and shoulders anatomy. And basically what the head and shoulders psychology is telling us is that the trend is going from higher lows, higher highs, higher lows, higher highs to now a big low, a lower high, and then a major lower low to come around 164. But I think that's really not going to be the case. And I think what will happen is we'll create some liquidity down here, but eventually respect this rally base and then move our way back up towards 260, the resistance of this level, and then trigger pretty much another leg higher on SMH heading into maybe Q1 or Q2 of 2025. I could be big time wrong. I could be big time wrong, team. But I think SMH is something that should be on watch at the moment for where it's at, trading at the level of support and seeing if buyers are going to show up here. So if we are going to be reactive, then that would be good. And one way to really find out is if NVIDIA is going to wake up. If NVIDIA is going to wake up with a massive demand candle on Monday or Tuesday, then I will say, you know what? Rotation could be flowing into SMH. If not, then I will probably stay out. We will find out, team. I don't want to fully get bullish yet. I would like to see more. For now, I'm only focusing on NVIDIA. Let's take a look at AMD also. And here's AMD. AMD is also sitting on this major trend line that dates back all the way to 2020, 2022. We have been pretty much riding this uptrend line, and we're currently trading right at that support. We have flushed off the momentum, but it is definitely looking a bit concerning with AMD sitting right at the last support before we see a major sell-off. So our bull's going to step in and reverse back up from here. If they do step in at this level of support, they can definitely break this level of resistance, and this will send us all the way up towards 214 in the next 2 years. For AMD, Dizzy, I would not play January contracts, March contracts, or even April. I would really give it so much time for AMD. It's just one of those stocks. And if I have the option, I would even stay away, honestly. You have June. Okay, June is not bad. You got a lot of time, honestly. You got a lot of time. That's not bad. All right, so far, online sales surged to record settings, 10.8 billion on Black Friday. I did want to say, Justin, these online stocks are looking really great. I was looking at some of these stocks, even Shop. You look at Shop, it's up a lot, but man, some of these stocks are looking very bullish. You look at, oh, you know what? Since you mentioned, Justin, here's a good one. I wanna give you a good one before we end the session. Ulta, check out Ulta. What a beautiful setup here. The only concern for me is that they have earnings, but man, this setup looks really great. Let's see how earnings comes out. Earnings comes out on December 5th after the market closes. So it's this week. So we'll see how this goes. Maybe or maybe not, we'll buy a call. If I do, I'll share with the team. But yeah, I think if I don't trade it post earnings, if earnings goes well, I'm really going to trade this all the way back up, because this is the last earnings here. If they report, what I mean is if they actually report positive earnings this time, the stock is going to make its way up all the way towards the 550s. So this is a long way. So even if they report and they come up to 405, I'm still going to buy all the way towards that uptrend if they do beat earnings. So there's going to be plenty of room, and I just don't want you to be chasing. Just take into account that this is an amazing opportunity, and given that we have earnings this week, if earnings goes well, this is going to be a great one for us to trade as well. TGT, I'm not really sure how to feel about TGT. Okay, I'll take that back. I did not know how to feel about TGT, but I'm starting to feel a lot more bullish now because things are looking really good. one thing that you see with these kind of stocks that report earnings is when they report earnings and just go down, that's very, very concerning. So here's what I mean. They report earnings and they go down a crap ton like that, right? And they consolidate, and they print candles like that and then go down. That triggers a job-based drop. But this one right here is actually breaking out of the zone, which is making me think that bulls are really going to step in on a big scale heading into the rest of this year. So keep your eyes out on TGT. I think it's going to be a good one to target 139 towards the 20 EMA next. But yeah, I think TGT is a good one. Just give yourself time, okay, team? Please, please, please. There's no reason to cut yourself short when there is so much time. When there is when the ones with the time are so cheap. If you buy the June 2025 calls, the 155 call is trading at 5.0, the 160 call is trading at 4.0, and the 165 is trading at 3.22. So here's what I say. Either buy the June 160 call at 4.0, or if you have a smaller account, you can buy a June 2025 165 call at 3.20. Now, for a bigger account, what I would recommend for you is I would recommend buying the the 170 call. So the 170 call, January 16, 2026, 170 call at 6.20 or 6.0. I think that will be a good one for the long term, for the bigger accounts that are much more comfortable with spending a little bit more for the value of time. VRTX. I think VRTX is one of those stocks that was really grinding. It's already come down. I see. Not sure how to feel about Vortex, to be honest with you here with me. I would stay away from it. It looks like it's seen a broadening formation here, but I'm not really sure how to feel about this one. If this is a broadening formation, then perhaps we will head back up towards the 540s into Q2 of 2025, but I'm really not sure how to feel about this stock.
Hey, Manny, can you hear me?
Yes, sir.
Hey, bro, how are you?
I'm doing good. Is that Paris? Yes, sir, it is.
Yes, it is. Hey,
I'm doing
quick
great,
question.
Paris. How are you doing?
Yeah, not bad, bro, not bad. I wanted to know if you were going to share your FSLR trade in the market review, or can we I was thinking about maybe buying some closer. I know you don't like closer expirations, but I've got a target at like that 239, and just wanted to see what your take was. To be able to see if I can give myself how much time, because this thing moves. It moves.
Yeah, you're right. You're right. It does.
Pretty fast.
Honestly, Paris, my first target for now would be the 215.65, which is the gap. I think if the stock gets any sort of good news, that's the first gap they will go for. There's also another gap at 226. And I think to have that target at 239 is reasonable, because this is where the supply zone is. So it'll likely, if they do step in here, that's where it will likely see some upside. So if we get some catalyst to finally push FSLR higher, this is where they will see any sort of real pressure. I'm not sure how to feel about the lesser time, but I will trust your judgment on it. And I am curious which strikes and expiration you're looking at, Paris.
I was personally thinking maybe 2 months out, 230s. It's going to be a bigger position for me. So.
Oh man.
Yeah, I know.
I see. So you're looking at January 17 or February?
I was thinking February 21st.
Oh wow, they are so expensive. They are so expensive. But I see if you buy like some very further out strikes, if you buy like maybe the 260s, they don't have a lot of options yet, but they don't have a lot of open interest, but they will always get open interest once the stocks do move. I'm honestly not sure how to feel about it, Paris, because stocks like this, the reason why I like giving myself time is because like you can pick up something for, let's say 3.0, and it'll end up going to like 15.0, even if you have so much time and your strike is so far out.
So what would you recommend? Let's say I put like a $20,000 position, right? What would you recommend?
The thing is, Paris, there are different strategies you can employ. Like here's something to help some of our traders make your trading even more stable, because I know time time is the essence. And like if it were me, if I were to recommend it to our traders for really large accounts, I'd say, you know what, why don't you buy this is just a theoretical, okay, I'm not saying buy this one, but even a contract like this one would literally be great, because you're buying a January 17 2026 340 call, and you know the stock will maybe not go to 320 for until it expires. For sure, it's never going to go there. But the point is, like, you will take advantage of a move where a contract like that goes up 200 to 300% to, let's say, 3000x, which it was trading at back in September around here. So yeah, back in September when the stock was trading at 260, that was trading at 30, which is which is 3000. So it would go from 1000 to 3000 here if the move were to repeat. And the thing is, like, you have 411 days until January 16, 2026. So that's one way that I would encourage our team to trade these kind of moves. You're basically trading contracts like you are trading a stock. Like, yeah, you may get the timing wrong for a little bit, but the essence of this strategy is that if the stock does go up, you're going to bank, and that's the beauty. Now, what does this strategy cancel out? Well, if you were to take, let's say, a 2-month out trade, 3-month out, or even a 6-month out trade, and this particular setup consolidated here for another month or two, those contracts would get really beat up. But your other contract is going to hold value really well, and as soon as they make just a tiny bit of move, it's going to gain its premiums back. Now, let's take a look at a trade that I think you should take. I would go with, let's take a look at June. Honestly, Paris, just take a look at the differences. If you take a look at the February 21st, you can see that there is very, very little open interest. And the reason why is, like I said, it's just too expensive. Here's what happens to these short-term expirations. Because the premiums are so expensive, even for super further out strikes, they're going to lose so much more value than they gain. But if you take a look at a June 2025, it's the opposite. Here's what I mean. They're going to get more premiums when they move, and they're going to lose less premiums when they move against you, if that makes sense.
So
you're
thinking maybe like 320s or 330s for June?
Yeah, here's the thing. You're giving up the strike expiration, but you're gaining the value of time, which stabilizes your options contracts. And the beauty is, you know why I like giving myself time, Paris? This is something that I have learned throughout the years, is that to invest, to buy the options like I'm investing into them as well. And here's what I mean. Sometimes we get into these moves, and little do we know that if the move does happen, then it's going to be at least 50% to 60% more than what we had originally thought. So if we thought that, for example, you guys all remember a couple of months ago, we were looking at the S&P 500. We had our target. This is when I'm talking about, sorry, not a couple months ago. Like I'm talking about a year and a half ago, when the S&P 500 was trading around $430, we were saying this was going to go to 586,000. You guys remember? And at the time, nobody really thought this was going to happen, but yet here we are. So this is what I mean. Let's say if you bought contracts 3 years out, targeting the 600 strike on SPY a year and a half ago, then you pretty much your investment, by giving yourself more time, literally gave you a few more additional years to see if you should take advantage of this continuing momentum. So that's what I call an investment. By giving myself more time, it just tells me, you know what, if I'm actually, if let's say this comes out to be a really great trade, and more things align with it, and it gains even more momentum, then the advantage is, if I have more time, I don't have to be like, you know what, if I don't sell it and they sell off for one day, I'll lose 50% because I don't have much time on it. If you don't have much time on the other expirations, that's exactly what would happen to them. But this one, it would hold its value. The reason why is because it has so much time, and at the price that it's trading at, and with the given momentum that it has, the premiums are still going to be priced in, and it's going to even gain more premiums, because the closer it goes to the strike price, the higher its delta becomes, which is another advantage. And that's why I really like having time on my contracts.
All right. Appreciate it, man. So I'll put a couple of these in targets, and I did see that the spread is pretty bad. It's got, even for June,
Oh,
You've
that's
got
pretty
almost
good to me, man. You're talking about the 50% spread there. I mean, the $100 spread. Hey, Paris, me with cross-eyed. That looks good to me. I'm kidding, but no, it doesn't look too bad, honestly. You know why? You know why I say that? Because it has a lot of open interest. The spreads usually get closer once we do get that momentum. The reason why the spreads are so high up is because look where we're at. You know, we're in a downtrend and we're barely breaking the surface here. So usually the spreads will tighten as we start an uptrend.
Got it. Yeah, it's bouncing off my 70.8 that I had kind of targeted for a while now, and I like seeing that the first daily candle off of that level. So I'll make a position tomorrow. I'll see if we get like a mediocre pullback, and then I'll end up taking a position on that. Thank you, man. Really appreciate your help.
Yes, sir. Honestly, looks good. Even without a pullback, I think it looks good. So far, the candle looks good. We'll see. We'll see. I don't want to influence you. I want to let you decide.
Right.
But yeah, I'm hoping you go with the June to give yourself plenty of time. I think it's a good contract.
Got it. Now, if you
Up
enter,
to you.
will
Really up to you.
will you alert in the group chat if you do take a position?
Yes, sir. We'll do.
Perfect. Thank you, man. Appreciate the help.
Yes, sir. Rivian, I'm not sure how to feel about Rivian. I was very bullish on it, Sputnik, but I would step away from Rivian for now because, or I would not say anything at the moment because Elon Musk was attacking Rivian this weekend, saying that oh, they gave Rivian a 6.5 billion loan, and that's unfair to us on Tesla for Tesla. So we'll see. We'll see how that affects Rivian tomorrow. But so far, on the bigger picture, I will say this. Matter of fact, I will say this, Sputnik. I am seeing so many Rivians on the road in California, and the reviews about Rivian are very good. So that's all I'm going to say. I think long term, it's a great opportunity. I think Amazon is not going to let it die because they're always going to keep it around as a competition to Tesla for the EV industry, but for the EV market. But yeah, if I were you, I would own very long term contracts on Rivian. Sorry, very long term shares or contracts. Don't waste your time on the short term expirations. It's way too cheap to buy short term. Elon just launched a lawsuit on OpenAI. He's going wild, man. He's metamorphing. But yeah, team, L doesn't look too bad. I saw your comment about L a few times. iPhone, I kept ignoring it. When you spell it out, when you spell out the company name, I have to cover it. It doesn't look too bad. I'm just waiting for some sort of catalyst, honestly. I'm really just waiting for some sort of catalyst. But it really, after seeing that big drop, I have been watching it for some time. I was kind of sad that I missed it out here. I missed out, but it really doesn't look too bad. Yeah, I kept seeing your L. I kept ignoring it. I was like, you know what? But it does. It honestly looks good. It really does look good. It looks good. Let's just see. Let's see a little bit more. Because the thing is, here's the thing. The stock is very oversold. So we know that the stock has been in a downtrend for a very long time. And once the stock does enter an uptrend, there's going to be so much room to the upside where we can go with the momentum. We don't have to feel like we're missing out. And that's what I mean. Once we break this downtrend, I'll be more confident to trade it, knowing that I'm going with the momentum of the trend. But yeah, team, that's all for me. I hope you have a great night. See you tomorrow. Take care. And I will post these in the weekly watch list as well with a screenshot. Take care, team. Thank you so much for your time. I really appreciate your time. Thank you.